Get into this video, I would like to give a quick disclaimer. I am not a financial advisor. The content of my video represents my personal opinions and is provided for informational, educational, and entertainment purposes only. This information is not intended to be legal, financial, or an investment advice. As always, conduct your own research and due diligence before making any financial decisions. Remember, it's your money. Make informed decisions that are right for you. I'll never ask you for money, nor will I provide my phone number or personal email address. If you encounter any suspicious accounts or messages claiming to be me, please report them immediately as fake or scam accounts. Hey everyone, welcome back to the channel. This week's economic data brought some crucial updates on inflation, and there's a lot to unpack for investors and traders. Let's jump into the highlights from the CPI and PPI reports which dominated the headlines. First, both reports point to moderating inflation in the US economy, a good sign that price pressures are easing. Second, energy prices remain a major influence on both consumer and producer inflation, highlighting the sector's role in driving costs. Third, while trends are positive, some inflationary pressures persist, meaning the Federal Reserve is likely to stay cautious in its approach. There are some encouraging signals though. Cost CPI moderation and a slowdown in rising shelter costs suggest inflation at its core is starting to stabilize. The PPI showed no change in its services index, another sign that price increases might be leveling off. So what does this mean for the markets? These trends give hope for reduced inflationary pressures, but the mixed signals from certain sectors remind us that it's not smooth sailing just yet. For traders and investors, this means staying alert to opportunities and risk as the Fed continues to weigh its next move. Stick around as we dive deeper into this week's market performances and uncover what's driving the trends across the major asset classes. Don't forget to like, subscribe, and hit the bell button to stay updated with all the latest insights. We begin this week's video by providing some solid education on the charts. Considering my strong viewership from Nigeria, we will explore both the Nigeria and the US markets, looking at the ASI, the All-Share Index, as well as the US Large Cap Stock ETF VTWO, to inspect for signs of reversal, trends, and to identify key regions to watch out for going into this week. Let's get started straight away. I have opened on the charting interface of TradingView the ETF ASI. So let's type that together, ASI, which is the NGX, which stands for Nigeria All-Share Index. And so what I have here is the weekly price action for the ASI. And you can clearly see that within the last 5 years, the price action has really been an uptrend. We had this period of where we had a bullish flag setting up, and now within the last 6 weeks we saw a breakout. And that's why, if you remember from most of my videos, especially from the beginning of this year, I've always identified a bullish trend in the Nigerian market. Now you can clearly see that in the last week, which is the week that just ended, we have this red candle, and clearly because this candle envelopes the previous week's candle, this is something we call a bearish engulfing candle. So it's bearish because it's red. If it was green and this was red, we're going to call it a bullish engulfing candle. And what we also have present is the weekly average, which is the blue is the 10-week and the red is the 20-week. So for now, I'm just going to hide that, and we're only going to focus on the candlesticks and the volume. Now, the yellow, as usual, the yellow horizontal lines are the weekly key regions, and the white are the key regions identified on the monthly time frame. Now we're just going to focus on the past week. You can clearly see that this bearish engulfing is a cause of worry, and it typically means that this price action may be reversing. One way to confirm the bearish engulfing is to look at the volume. And when I look at the volume here, you can clearly see that even though we had a very strong candle, which is bearish, you can actually see that the volume is weak. So basically we have low volume, which may indicate weakness. And also the weakness is also confirmed by this tail and this bearish engulfing candle. So you can clearly see that the sellers attempted to take price down, they wanted to sell off, but you can see that the buyers have kind of stepped back in to push the price back up, and that is why we have this tail. So this is what we are seeing from the weekly time frame. Another way we can confirm this bearish engulfing candle is to look at the unbalanced volume to actually see that selling pressure this week. So what I'm going to go is on indicators. I'm going to search for OBV, which stands for unbalanced volume, and I'm going to add this to the chart. And clearly you can see that there was some selling, and this is the selling that this candle brought about. And you can see that the volume has decreased from its rather upward trajectory. You can see that dent. So now on the weekly time frame, we kind of see that there's a sense of bearishness, but it is weak because this volume is weaker than the previous 2 weeks. Now if we go down to the daily time frame to kind of see what's happening on the daily time frame, what we see here is this week. So this is Friday, this is Thursday, this is Wednesday, Tuesday, Monday. So basically from the beginning of this week, you could see we have 4. Basically we can see from here. So if I come here and put a mark on it, you can clearly see that post this vertical line you have 4 red candles and 2 green candles. So in short, the bears, we had more bear days than bull days this week. Well, there's some things I can identify here. I can see a candlestick pattern here. This is a 3 candlestick pattern, which is called the 3 black crows, where the price closes very close to the low of that day. 1, 2, followed by a very deep sell-off, which is the bearish engulfing candle. This is a bearish candle. You can see it's a very bearish, followed by another day of bearishness with this big heavy bearish candle. And the good news comes with this pattern here, which is what we identify as a hammer. A hammer can be recognized by a small body, you can see that, and a very long tail. What does this mean? It actually means that the sellers who have been in control of the price action starting on the 10th of January, they went to continue the same action of sellings, but the buyers stepped in and said that's enough. Basically the sellers got exhausted and the buyers pushed the price up such that the price even closed above where it started on that trading day, and the following day we can still see the buyers also stepping in. One good thing we can also observe from this candlestick pattern is from the volume, where you can see the volume is larger than the volume the previous day. Now just the occurrence of what looks like this candlestick, which I call a hammer, it's also good to be able to confirm it. So one way we're able to confirm it is by this volume. Another way is by looking at the unbalanced volume, and we're going to look at that. We want to see that the buying on that day is actually severe, it's actually high, and you can clearly see it here that this is where the selling started. And you can see on the day the buyers, you can see that there is a change. You can see this kind of trough showing that yes, the buyers have stepped in and they're taking the price up. So that is another confirmation on top of this volume, is the unbalanced volume. Another way we can confirm it is to see that this candlestick pattern occurred at around a key region. So what I'm going to do is to activate my K clustering algorithm. Remember to look for the key regions on the chart. I'm going to also turn off my volume so that it can be much clearer. And you can clearly see that that action happened around the support region. So now if I come here to identify that region on the chart and close it back, you can clearly see that the buyers actually stepped in around the support region. Even though sellers went, there was a huge battle, but eventually the buyers came into the market and have pushed the price up, and now we've even closed above this key region. So I also have been able to show 3 factors to confirm this bullish hammer candlestick. So yes, the Nigerian market went through some bearishness earlier in the week, but it looks like the buyers have stepped in back and there's a reversal for price to continue its bullish trajectory. Now we're going to head on to the next asset, which is VOO, which stands for the US large cap stock. So if I go to VOO, as usual, I always like to start kind of a top down analysis, so I'll go to the weekly time frame. For the previous week, we've always clamored on the head and shoulder pattern, and in my last week's video I mentioned that we were in a region of confluence, and I mentioned that the region of confluence is where you have 2 or more technical markers intersecting. And in the last week I said there is a key region here, this trend line, and I also mentioned the 100 EMA, or if it was SMA. So let's put on the SMA just to confirm that, just for a recap. We're going to need the 100. It was on the daily time frame, so let's just go back to the daily time frame quickly. And yes, you can clearly see that this region here is a region of confluence. You have the key region, you have the moving average, you have the trend line. And I said, based on probability, this region should act as support. Remember guys, support region is support until proven otherwise. Resistance is resistance until proven otherwise. There's no point second guessing it. There's no point trying to be a prophet saying, oh, it's going to be support, oh, it's going to fail. Respect it until it proves otherwise. You are not supposed to predict, you're supposed to react. Now, we expected this area to be to put up a strong fight against the sellers. And voila, with some of the economic data that came out this week, we were able to see that the selling pressure reversed. And so by this, we had a very good price appreciation this week. You can clearly see that this head and shoulder pattern has been negated. Now so we have to take it off. There's no point dwelling on head and shoulders anymore. It's been negated. However, we also have this region marked for where the price will have dropped to, assuming this head and shoulder pattern played out. Now, one thing I also want you to see on this daily chart is that price has broken out from this downward trend that I established since December 12th or 6th. You can see price actually broke out from it. However, you can see selling pressure at this region of resistance. This region of resistance was established on the daily chart. Let's have a look at how I came about it. Can you see that? But turning on the key caution algorithm, you can see this region here has a region of resistance, and you can clearly see that playing out. Price broke out from this region of confluence, gapped up from this area here. Let's turn that on. You can see that it gapped up from here over here. So now we can move this here. This is it. Now you see it's dynamic, so it's not static, so it changes based on price action. And you can clearly see that price gapped up from here over this resistance and also over this trend line. However, it has met resistance here. Why did I say that? Because you can see from this week, you can see selling pressure. So that is what this means. Price went as high as this, but the sellers pushed it back low. So here is the line in the sand. This is the line that price has to break out from. Also, price has broken out of this downtrend, but it hasn't confirmed. It might be a fake out. It might be a mechanism by the market makers to bring in buyers, retail traders, to continue the rally. However, you have to wait for confirmation, meaning you want to see another candlestick open, preferably above this candle, and close above this candle. Another scenario will be for even price to open above here on Monday, and then we are sure that we are up to the races again, and this will be the next line in the sand. Let's just see also what's happening on the weekly time frame. That was my intention. My intention was to start on the weekly time frame, but the way I had to do the analysis was on the spot, and we had to start from the daily time frame. Let's look at what's happening on the weekly time frame. You can clearly see that price. You can see this bullish candle from this region of confluence this week, and I remember from the market report that we presented earlier, this was a 3.96% move. You can see it's a very strong bullish candle. In fact, this is a bullish engulfing candle, like I said, because you see it envelopes the previous week. Let's see how strong that candle is by looking at the volume. You can clearly see that even the volume is much bigger than the previous week's volume. So this is a very strong bullish candle, and this actually shows that buyers are enthusiastic in the market, and I'm sure this is due to the CPI and PPI reports we got this week. You can also see that the price has closed above this downward trend. This is what we also saw on the daily trend, and you can also see that selling pressure here from the resistance region here. So by looking at the daily and weekly time frame, we're able to see that this region of confluence held. We kind of have a break from this downward trend here, but it might be a fake out. So we need to see what is going to happen this week. Are we going to see confirmation and that it's not a fake out? And are we going to close this week with another price action where the candlestick closes above this key region? Remember, even if we close above this is our next target. We need to break this region for us to be sure that the bullish rally that has been in the market for the past 1.5 years is still in effect. So thank you guys. Let's get back to the other segments of our video. Let's commence our market performance summary with the US large cap stocks ETF VOO, which delivered a weekly gain of 3.79%. Year to date, VOO has delivered plus 1.98% compared to previous year's 24.98% change. The short-term bias on the daily time frame exhibits a neutral trend, while the mid-term outlook on the weekly chart is neutral. Moving on to the Nasdaq, represented by the ETF QQQ, this week saw a change of 4.10%, bringing its year-to-date performance to 2.06% versus last year's annual return of 25.58%. The daily time frame presents a neutral bias in the short term, while the weekly chart indicates a neutral bias also in the mid-term. US small cap stocks measured by the performance of VTWO this week posted a gain of 5.10%. Year to date, VTWO has delivered a performance of 2.04% compared to last year's overall gain of 11.55%. In the short term, the daily time frame shows a neutral trend, and the mid-term outlook on the weekly chart is neutral. Canadian equities, represented by the ETF VCN, this week saw a change of 2.09%. Year to date, VCN has delivered 1.61% versus last year's overall gain of 22.16. The short-term trend on the daily time frame is neutral, while the mid-term outlook on the weekly chart indicates a bullish trend. Switching to the Nigerian stock market, tracked via ASI, the week-to-date change is negative 2.94%. Year to date, ASI has delivered a return of negative 0.56% versus the previous year's overall gain of 37.65%. Short-term outlook on the daily chart points to a bearish trend, and the mid-term outlook on the weekly chart indicates a bullish trend. The oil commodity, tracked by USO, recorded weekly gains of 1.24%. Year to date, oil prices have delivered 9.23% compared to last year's overall gain of 13.35%. The short-term outlook on the daily chart is bullish, while the mid-term outlook on the weekly chart is neutral. Finally, Bitcoin, tracked by GBTC, recorded a significant weekly change of 15.28%, far outperforming all other asset classes. Year to date, Bitcoin prices have delivered 12.20% compared to last year's overall 113.81%. The short-term outlook on the daily time frame is neutral, while the mid-term outlook on the weekly chart exhibits a bullish trend. My closing thoughts. As we wrap up this week's market summary, it's clear that the markets are offering a mixed bag of opportunities. While US large caps, the Nasdaq, and the small caps remain neutral in both the short term and mid term, the Canadian market and Bitcoin show promise with bullish mid-term sentiment. Nigerian markets may be experiencing short-term headwinds, though with signs of reversal from a technical perspective, but the mid-term outlook looks optimistic, reflecting potential growth opportunities. Oil, with its short-term bullish momentum, adds an interesting dynamic to the energy space. Thanks for tuning in. Don't forget to like, subscribe, and share your insights in the comments. See you next time. Until then, trade wisely and stay informed.